Most people think that property investing is just about buying property where you live, in your neighborhood, in the city you live in, or maybe if you're feeling a little bit risky, in the state that you live in. And that's because most people, when they invest in property, they want to keep it safe, they want to make it simple, they want to reduce their risk. And of course, they want to do something that's familiar, they understand the market most of the time. But the thing is, when you only invest in the market that you live in or the market that you are familiar with, you're creating more risk for yourself unintentionally because your entire property portfolio is tied to that market. So if there's any fluctuations in the market that you live in, for example, if you live in a mining town and the mining industry collapses, that's going to affect your property portfolio. Now, offshore property, investing in international markets, on the other hand, actually reduces your risk because it lets you step outside of the bubble that you're currently in. It allows you to tap into markets that are growing faster than where you are currently living. It means that you can diversify your portfolio so you're not reliant on one industry, one city, one state, or even one country. Because as we all know, anything can happen tomorrow. And something that most people don't consider is that when you invest in property in a different country, you're also buying yourself a new lifestyle in the process, either a new residence so that you can live in that country, or even a path to citizenship. So in this video, I'm going to break down 5 different reasons why investing in offshore property will not only grow your wealth, but also completely change your life. So the first reason is that you can diversify your investment portfolio and therefore reduce your risks. Because if something happens in the US, for example, but you've got property in Asia, these are 2 completely different regions of the world. Your entire property portfolio isn't dependent on just one market. This puts you in a much better position than someone who puts all of their money in property in Seattle, for example. Because if something happens in Seattle, the value of that property, the entire portfolio, is going to come right down and it's going to hit them hard. Whereas if you're diversified across different cities or even different countries, preferably, you're not going to be hit as hard. You know, when people talk about investing in the stock market, they're always talking about diversification. And for anyone that does invest in the stock market, this is common knowledge. But for some reason, it doesn't always translate into property investments. Most people only invest where they live. They only invest in the market that they're familiar with. Now, obviously, a few decades ago, it might have been very difficult for you to invest in different property markets. You have to jump on a plane, you've got to go over there if something happens. But today you can use property managers. There's plenty of different tools that you can use to make sure things are working. You can do property tours. Look, we live in a world that's ultra globalized. You've got the internet. There's plenty of people that you can pay to manage the properties, fix things. It's much easier to do now than it was a few decades ago. Another reason why you want to invest in offshore property is because the returns are going to be much higher than they are in the West. The gains that you would have got in Australia, the US, UK, for example, those gains have come over the last 10 to 20 years. If you look at Australia or even Canada, because they're quite similar markets, the price of property is outrageous. It's something that is a hot topic. Everyone's talking about it. People are wondering if the property market's going to crash. It recently did in New Zealand. There's talk about the property prices declining in Canada, and who knows. But the thing is, when the average value of a property in Australia is $800,000 to $900,000, in Sydney alone, it's $1.2 to $1.3 million. When you buy a property at that price point, the intention is that you're going to invest in it, hoping that the value of the property is going to increase so that you can sell it later, or you're simply parking your money in it and then renting it out. When you invest in a property at such a high price point, you can hardly expect that it's going to double your money. Most people take their money out after 6 to 8 years, and if you buy in at 1.3 mil, the chances of it going to 2 or 2.5 mil is extremely low. Now, of course, you might be happy with just $100,000 or $200,000 gain, or you might just want to park your money into some property and make a return on the rental yield. It really depends on your strategy. But if you invest offshore, you can buy 2 or 3 properties in an emerging market for the same amount of money that you would use as a deposit in a Western market. And in those emerging markets, you can charge Western rents. Because believe it or not, we do live in a globalized world. If you pick the right market, there's constant flows of tourism. Mexico, for example, there's 130 million people living in Mexico. But if you invest in a place like Cancun or even Playa del Carmen, which has 3 to 4 million people coming in and out of that place every year, then you can quite easily buy a property, rent it out short term, and make your money back. You could pay off that property in a very short period of time compared to in the West. You can get into the property market at a much lower risk, much cheaper cost. You don't have to drop down your entire life savings just to get on a property ladder. And instead of hoping and praying that when you buy a property, it's going to increase in value and worrying that if the market takes a downturn, it's going to totally destroy you, because it's less risky and because you're getting in at an earlier price point, the chances of it going up are much higher. In fact, the chances of a property that you buy in Mexico for 200K climbing up to 400 or even 500K over the next 5 years is, in my opinion, far more likely than if you were to buy a property in Sydney for 1.3 mil and hope that in 5 years' time you could exit that property at 1.6 or 1.7. Because not only are you hoping the prices are going to increase, you also have to sell the damn thing. It's much harder to sell a $1.7 million property than a $500,000 one. So when you invest in these offshore markets, the potential for higher returns is there. The next reason why you might want to invest in offshore property is because of the tax benefits. Some countries do have restrictions on foreign ownership, but others are a lot more friendlier to foreigners, which means that you can buy a property and in some cases even have a pathway to residency and citizenship. If you look at a place like Panama, for example, you can get residence by investing in a property there, plus there's no tax on your global income. You're only taxed on the money that you make inside the country. So if you have a location independent income stream, Panama might be a place for you to buy a property and spend a few months of the year living there. Other countries have exemptions on capital gains tax, which means that if you buy in at a low price point and you make $400,000 to $500,000 gain over the next 5 or 6 years on that property, you can sell it off without paying any tax. Another thing to look out for as well is inheritance tax. Some countries have it, some countries don't. So depending on the reason why you're investing in property, maybe you want to build a huge portfolio, leave it to your kids. You want to consider where you're actually buying these properties, and you want to also consider if these countries are debating whether or not to implement inheritance tax. Australia, for example, is a place that doesn't have inheritance tax, but the topic has been brought up quite a few times recently, and so it's something that you might want to consider. Do you want to take the risk and invest your money into a mature, established market like Australia because everyone says it's such a great property market and because it doesn't have inheritance tax, only to be surprised in a few years' time the government implements it and all of a sudden that investment is not looking so good? The alternative is to look at some of these offshore markets that are specifically saying to foreign investors, if you buy property here, you'll get a path to residence, a path to citizenship, there's no capital gains and there's no inheritance tax. And they're doing this to incentivize people to buy there. Dubai, for example, has no property taxes, there's no income tax on the rental income, and no capital gains tax on sales. This is why it's such an attractive market. The rental yields are also very high, you're looking at maybe 5 to 10%, and you also have a path to the Golden Visa program. So if you invest about $550,000, you can get a Golden Visa. Other countries incentivize foreign investment by giving you tax breaks or incentives. Vietnam is an example of this. There are certain economic zones set up specifically for foreign direct investment. So depending on where you buy property in the country, you could qualify for these incentives and subsidies. That might be something as simple as not paying tax when purchasing or selling the property. The fourth reason why investing in offshore property can completely change your life is because of the lifestyle advantages. Owning offshore property can open doors to residence, citizenships, as I mentioned earlier, but it also gives you the opportunity to live in an emerging market with more vibrant cultures, more welcoming people, just a better quality of life in general. Some countries are investing heaps of money into new infrastructure. If you look at Asia, for example, the Philippines, Malaysia, Vietnam, even Indonesia, there's a lot of money going into new infrastructure to make things more convenient for people. So if you buy a property in one of these countries, not only are you buying in at a lower price point comparatively to the West with a higher expected ceiling, but you're also opening the door to have a holiday home somewhere. And when you're not using that holiday home, you could rent it out to people and make money that way. Now, the final reason why investing in offshore property will completely change your life comes down to currency diversification and global market access. So investing in property in emerging markets allows you to hold assets in a completely different currency, which reduces you to exposure to currency and market fluctuations. In some places, it might also grant you access to opportunities that are only available to people who own property or are a resident of the country. And so by investing in property in some of these countries, you have a path to residence, which opens up new windows of opportunity. It can be a good idea to diversify where your assets are in some cases. If we look at a historical example, the Euro crisis in 2010, countries like Greece, Spain, and Italy went through some severe economic problems at the time, and that affected the euro stability, which meant that everyone who had property in Spain, Italy, Greece, if they only invested in those countries, they were affected most. But the investors that had properties in the UK for the British pound, or the US for the US dollar, or even in some of these other emerging markets where there's different currencies, they were less affected. So this way their entire property portfolio wasn't wiped out because they were diversified across a few different countries. The thing is, most people, like I said at the beginning of this video, only invest in the market that they live in. They have a job in the market that they live in. They have a house that they live in that market. So if anything happens in the place where they live, it can wipe them out. This is a risk that most people are quite happy to take on because they're simply not aware that there's other opportunities that exist elsewhere. When you invest in the stock market, you diversify your portfolio across industries. The same should apply when you're a property investor. And so if you invest in offshore markets, you'll not only give yourself an opportunity to increase your wealth, but you'll also be able to enrich your life through more security, better growth potential, and the lifestyle benefits that come with owning property in emerging markets. So guys, let me know in the comments below if you have any questions. And as always, I'll see you in the next one.